Take a quick look at this chart. See how the price reacts to this blue line. Sometimes it goes up very fast, sometimes it drops down quickly. You might think this is some complicated moving average or a secret indicator, but it's not even close. This is the Anchored VWAP, and when combined with the RSI, it can show you exactly where smart money is buying and selling. In this video, I teach you how to use Anchored VWAP with RSI to catch high probability scalps on a 5-minute chart. So stay with me until the end. Understanding Anchored VWAP. Let's start with the Anchored VWAP. You might already be familiar with the regular VWAP, which stands for Volume Weighted Average Price. We actually have a separate video where we explain the VWAP and RSI combination in detail. I leave the link in the description. But for those of you who may not fully understand it yet, let me explain it briefly here. VWAP is an indicator similar to a moving average that represents the average price of an asset weighted by volume during the trading day. Unlike a simple moving average, VWAP takes into account how much volume was traded at each price level. Because of this, VWAP is a very powerful tool for understanding where institutional traders and smart money may be active. However, the regular VWAP has one important limitation. It always starts its calculation from the beginning of the trading day. It works well for day trading, but it becomes a problem when you want to analyze a specific trend or a price move that starts several hours ago. So the question is, what if we want to measure fair value from a specific point in time? That's exactly where the Anchored VWAP comes in. Unlike the regular VWAP, the Anchored VWAP allows you to choose the exact candle where the calculation begins. You can anchor it to the start of an uptrend, a downtrend, a major reversal, or an important market event. From that point forward, the Anchored VWAP shows you the fair value of the asset relative to that move. Identifying the trend and plotting the Anchored VWAP. Before entering any trade, we must first identify the trend. Since this video is focused on scalping, we'll be working on the 5-minute time frame. Look at the price action and ask yourself a simple question. Is the market making higher highs and higher lows? If yes, we are in an uptrend. Is the market making lower highs and lower lows? Then we are in a downtrend. Once the trend is clear, the next step is to find where that move actually started. In an uptrend, this is usually the candle where price began to rise strongly after a pullback or a period of consolidation. In a downtrend, it's the candle where price started falling after a small bounce. Now let me show you how to plot the Anchored VWAP on your chart. If you are using TradingView, look at the left side of your screen where all drawing tools are located. Come down to 5th down from top and click on the arrow next to the drawing tools to open the full menu. Scroll down until you find Anchored VWAP and select it. Once the tool is selected, simply click on the candle where the trend started. The Anchored VWAP will automatically plot itself starting from that exact point. Now, this part is very important. Plotting the Anchored VWAP from random candles is completely useless. If you anchor it at the wrong place, the line will not represent fair value and your trades will have no edge. That's why we always anchor the VWAP at meaningful points, such as the starting point of a strong trend move. Now go to the settings. In the Input tab, uncheck all options, you don't need them, and go to the Style tab and make the VWAP line a bit thicker so it's more visible on the chart. Then click OK. This line will often act as dynamic support in an uptrend and dynamic resistance in a downtrend. Every pullback and potential entry will now be evaluated relative to this fair value line. Using RSI as a confirmation tool. Next, let's use the RSI indicator. From the Indicators section, add RSI to your chart, then open its settings. In the Input tab, set the length to 14. In the Style tab, uncheck all options except RSI and the RSI middle band. Set the middle band level to 50 and make all the lines a bit thicker so they are easier to see on the chart. then click OK. Now let's talk about how we actually use RSI. As you may already know, RSI is a momentum oscillator. It helps us understand whether the market is strong or weak. For a buy setup in an uptrend, we want the RSI to be above 50 and rising. This tells us that buyers are in control. For a sell setup in a downtrend, we want the RSI to be below 50 and falling. This tells us that sellers are dominating the market. In this strategy, RSI acts as a filter. We don't enter a trade just because the price touches the anchored VWAP. Without momentum confirmation, we risk entering false pullbacks. Entry rules. Let's start with a buy setup in an uptrend. In an uptrend, price will often retrace back toward the anchored VWAP. This is normal and healthy price behavior. When the price gets close to the anchored VWAP, this is considered a pullback, but don't enter immediately. First, look at the RSI for confirmation. For a valid buy trade, the RSI must be above 50 and moving upward. This tells us that bullish momentum is still strong. Next, shift your focus back to price action. Wait for a bullish candle to form near the anchored VWAP. When both conditions are present, price reacts to the anchored VWAP and RSI stays above 50, we enter the trade at the close of that bullish candle. Now look at a sell setup in a downtrend. In a downtrend, price will pull back upward toward the anchored VWAP. Again, don't enter as soon as price touches the line. First, check the RSI. For a valid sell trade, the RSI must be below 50 and moving downward. This confirms bearish momentum. Then wait for a bearish candle to form near the anchored VWAP. When price reacts to the anchored VWAP and RSI remains below 50, you enter the trade at the close of the bearish candle. By combining the anchored VWAP and RSI in this way, you avoid chasing market and focus only on high probability entries. Real market examples. Buy setup. Let's start with a real buy example on a 5-minute chart. First, we need to draw the anchored VWAP. Go to the drawing tools on TradingView, select anchored VWAP, and now we choose the starting point. Look at this chart. The price was in a tight consolidation before it started a strong uptrend. This candle here marks the beginning of the move. We click on this candle and the VWAP line is now anchored to the start of the trend. Now watch how price pulls back toward this line. This is a healthy pullback in an uptrend. Next, check the RSI. It's above 50 and moving upward. Momentum is bullish. Now wait for a bullish candle to form near the VWAP. Here it is. This is our entry candle. We enter at the close of this candle. Place the stop loss just below the recent swing low and set the take profit at twice the distance of the stop loss. As you can see, after entry, price moved upward and hit our take profit perfectly. Sell setup. Now let's do a sell example. First, we select the anchored VWAP again. Look at the chart. The price started a strong downtrend after this small bounce. We click on the candle where the downtrend begins and the VWAP is anchored. Price then pulls back upward toward the VWAP, a classic pullback in a downtrend. Check the RSI. It's below 50 and moving downward, confirming bearish momentum. Now wait for a bearish candle near the VWAP. Here it is. This is our entry candle. Enter at the close of the candle. Place the stop loss just above the recent swing high and set your take profit at twice your stop loss. After entry, you can see price continued downward and hit our take profit perfectly. Okay, that's it for today's lesson. You just learned how to use the anchored VWAP to catch pullbacks, confirm your entries with RSI, and enter trades at high probability levels. If you found this video helpful, please like, subscribe, and turn on notifications so you never miss a strategy that can take your trading to the next level. Thanks for watching, and I'll see you in the next one.